everyone. A really warm welcome to you all from the European B Corp community and from NetGuru. We're really delighted to be with you here today at the Disruption Forum. My name is Katie Hill and I'm the CEO of B Lab Europe, which is a systems change organisation operating in a global network of B Lab partners. And what we do is we create standards and policies and tools for businesses to measure and manage their impact. And then we certify companies known as B Corps who are leading the way in running their operations for the benefit of all stakeholders, not just for shareholders. So we're really delighted to be partnering with NetGuru, who now joins the developing B Corp movement in Poland as a certified B Corp. And through the outreach of this Disruption Forum and through NetGuru's own dedication to creating a positive impact through their business, they're really flying a kite for how sustainability can be core to a growing tech company in Europe. And this session today actually combines with our third session in our Interdependence Unpacked live series. And through these, we aim to shine a light on pioneering thought leaders from business, finance, public policy, academics, civil society, and trying to explore some of the really big questions that our global community is facing. And we recognise that these are the kind of questions that require diverse perspectives and collective sense-making. And only through that process can we actually understand how we can all create an economic system that works for everyone, not just a few. So thank you so much for making time in your day to join this conversation. And today I'm really delighted to be hosting a conversation with our two guests, Marilou van Golstein Brouwers and Philippe Zaouati, whom I'm going to introduce to you in just a minute. And here they are. I will introduce them properly to you in just a minute. We're going to follow this session after a short break with an interview moderated by my colleague at B Lab Europe, Leila Benamara. So just to set the scene, we find ourselves really in the middle of a pandemic with tumbling economies and political and economic seesawing between prioritization of health and the economy and a really swollen role for governments as financiers. And our globalized economic system has really revealed itself to be something of a mixed blessing. And while it's lifted many out of poverty, we see that it's not founded on collaboration, equality and interdependence. And it needs to be rebuilt urgently to serve better nature and its inhabitants. And the role of finance is really inseparable from the economic system we have. So we just need to understand how it works, who it serves, why it's hard to change, even though it's widely recognized it needs to, and how we can all play a part in resetting the economy. We're seeing increasing pressures on companies, especially but not exclusively large ones, to show their true colours and be judged by their expressions of purpose and values. Is this the same for the investor? It's not always clear who leads and who follows, investor or investee. And in moving to this new paradigm where we place impact of finance at the core of corporate decisions and investment decisions, we therefore would make a radical upending of the current financial system. So let's explore the concept of sustainable finance this morning, what it is, what it could do, and what it needs to do, and the system into which it plays, and how we can learn from the pioneers, and we can all potentially play a role in influencing and shaping the future of money in the future. So to lead us in this task, as I say, I'm thrilled to introduce you to two of our continent's financial leaders. Both are pioneers in the investment space and both have held clear vision from well before others were even focused on creating a sustainable financial system. So firstly, we have Marilou. Marilou was until recently, the chair of the management board of Triodos Investment Management, which is a subsidiary of Triodos Bank, where she worked for 30 years, leading its initial creation as a pioneer impact investment asset management company, through to holding the office of chair of the investment committee. And Triodos is certified as a B Corp and has specialized in emerging markets, with a focus on energy and climate and on sustainable food and agriculture. And we've just heard from Ulrich Hoyer in the previous panel about the growing demand for sustainable banking. And this is a field that Triodos has absolutely led the way in, with Marilou very much at the core of that. And since April 2020, Marilou has had her own company, set up her own company called Liberating Money. And she is still hugely active in different non-executive board and advisory roles, including B Lab Europe, which I'm thrilled to say, and BRAC International and the Global Impact Investment Network called GIN. She's also highly active in ensuring that women enter the world of finance and has been a champion for this agenda. So to the women of you in the audience, Marilou has been gunning for you for a long time. Secondly, I'd like to introduce you to Philippe. Philippe is Chief Executive of Mirova, which is an asset management company specializing in sustainable investment, and it has 15 billion euros under management. And he created this within Natixis in 2014 and is recognized as one of the pioneers of green and sustainable finance. And after a career with expertise in quantitative management, he really devoted himself for the last 10 years to the development of responsible investment and impact investment, and has a special focus on natural capital. And Philippe has influenced responsible and sustainable investment through his involvement in asset management associations for France and through his involvement in the European Commission's Sustainable Finance High-Level Expert Group. He's the author of 3 books. He's been involved in political debate. He's one, might say, a creative activist through establishing the think tank, Osons le Progrès, which aims to be a laboratory of progressive ideas. And Philippe is leading the company's plans to become certified as a B Corp, which I believe is really imminent. And as well, we'll be looking to adopt the purpose-driven legal status that's now available for companies in France, known as Société à Mission. So finally, let's get to meet them both. Really delightful to have you here. Marilou, may I start with you? I wanted to ask you about your commitment throughout your working life to this mission to create an alternative to the dominant approach of investment. And you had an insight and a perspective on this well before it was a commonly understood concept, let alone a reality. So please do tell us more about your early perception of this opportunity and what's just sustained you to continue ongoing in this quest to create this equitable system.
Yeah, thank you, Katie, and I'm very happy to be here. And actually, my first job after studying business administration was with Cargill as a commodity trader. I was trading corn and wheat, and then after 3 years, I moved into finance. I started to work for a small private wealth bank, and I was investing for small families and pension funds. But after a while, I realized I was still trading, but now stocks and bonds. And in itself, I enjoyed it. It was, the excitement of sitting behind the screen, seeing prices move, and knowing that I was making money. It was in itself an exciting job. But after a while, it felt really empty because I felt I wasn't adding much value to society, and I was certainly not contributing to causes I really cared about. So I decided to move, and I joined Triodos Bank, and it was a very small bank at the time. This was in 1990, and we were only with 20 people, but we had a clear mission to make money work for positive change. And in 1990, we actually created our first impact investment funds. I mean, we didn't use the term in those days, but it was a fund where we were buying agricultural land and leasing it to organic farmers who otherwise would not have been able to start. And it was a fund open for retail investors. And I soon realized that there were many people who wanted to invest their money for a cause that they cared passionately about it. And while at the same time making a reasonable financial return. So this notion that people want to invest according to their values, and the notion that finance is a very powerful tool for change, these two notions were actually the start of our impact investing business. And I've seen many examples where through financing companies at the forefront of environmental change, of social change, you can actually make a contribution in the world, you can change the world. And since then, I've always worked on creating investment funds that were open for retail investors, because I think it's very important that all people have access to these type of investments and can invest according to their values. And at the same time, I've always felt it important to work on the level of system change, because ultimately we need to change the financial system for it to work for all people and for the planet. And so, for example, through my role in the GIN, we try to address the issues on a more global scale. So, maybe so far.
Fantastic. Yeah, and you've kept this, you've held this throughout, all the way through, and have really led so many interesting movements and new products and new approach to it. So it's such you've kept to the line continuously and helped us all to come through on it too. And I know, Philippe, also you have seen the intricacies of the financial system from within the derivatives unit of a major French banking group. And I'd be really interested to know how that insider perspective of the financial system helped shape your vision of the type of financial system that you wanted to, and are really helping to create in Europe. And I think you might be on mute. Yeah.
Hi, thank you, Betty. Yeah, I mean, actually, we have a very similar background with Marilou. As you know, I started, as you mentioned, as a quantitative asset manager, so spending most of my time in front of screens. But I only did this for maybe 1 or 2 years because it was not really what I wanted to do. But then I worked during 20 years in the asset management business in very traditional positions, I would say. And then the big financial crisis came in 08, 09, and it was clearly something very strong. I mean, and I realized that people like me who finally arrived in this business, in financial business, at the beginning of 90s, with all this mathematical background and trying to put some rationality and all these very quantitative methods, and the fact that we explained to our clients that we were just skipping all the emotion that was very bad, because emotion leading to wrong decisions. So it was better to rely to models and so on. All this has led to finally the financial crisis: opacity, complexity, disconnection between the financial business and the real economy. And so it was a very interesting time for me, because it was exactly the time when I arrived. I joined Natixis. It was in June 07, so really a couple of weeks before the beginning of the crisis. And so I basically tried to convince my colleagues, with a couple of friends as well, that we could use sustainability as a new way of doing business, and also as a way to position ourselves in the markets. So it was, not only values thinking, but also business thinking. And I experienced a very, very strong pushback from the portfolio managers and from some of my colleagues at that time. So it was 12 years ago. So the momentum was not there yet. And so I finally came to the conclusion that it was very difficult to change from the inside, but with a big momentum, with big size. Natixis Asset Management at that time, it was 350 billion euros, and it was very difficult to change this kind of big animals. And so it led to the creation of Mirova a couple of years later, with the idea that it was probably easier to do it on a smaller basis, but with a very strong conviction, and then not trying to push inside the system, but to pull the system from the outside. So this is clearly the reason which led to the creation of Mirova.
That's super interesting. Yes, there's so much, heart and head together. The fact that the business and the values can be aligned, and how you actually understand the system before you know how you can help to create a movement around changing it. That's really interesting. I thought it might be useful actually for us just to define our terms a bit, what sustainable finance actually means to us, because it probably has a lot of different definitions. And Marilou, could you just give us your view of what does it mean to you, and how well is it? Do you think it's describing any part of our current financial system, and why is it not doing enough? Thank you.
Yeah, I actually see it at two levels. Let's say for me, sustainable finance is, finance that serves people and serves the planet. It's a finance that takes into account both the impact as well as the risk and the return. But I also see it at the level of the system. So what is a financial system? And for me, a financial system is a system with a diversity of many players and offering products to all people and serving real needs. And again, while taking into account the boundaries of the planet. And I don't think that our current system is sustainable. There's a big focus on standardization, on scale, on efficiency, and we are losing the diversity. And the tendency is towards monopolization, and I believe that's not going to be sustainable. And I think we should learn more from nature. Let's say in nature, it's clear that if you want to have a resilient system, you need diversity. And so, for example, 2 days ago in the Dutch financial newspapers, there was this this rumor about UBS and Credit Suisse maybe merging. I have no idea if it's true, but these are already two quite big banks, and we've seen mergers like that in the past. And it's all because of the mantra of we need scale, because we need to be efficient, and we need efficiency because otherwise we won't survive. And I certainly don't believe that's true. And I think maybe another flaw in our current financial system is that it's very focused on short-term results. On the stock market, it's all about the next quarterly results. And I think for the investments in the transitions that we all know are needed, we need investments that really have a long-term focus. But we also need investments that may generate the returns only over a longer period of time. And there's currently a big gap there. And this is what, Mark Carney, the governor, or the former governor, I should say, from the Bank of England, he called that the tragedy of the horizons. And I think it's an important flaw in our current system. And another thing is maybe this focus on efficiency and low cost. That's driving many of the institutional investors to invest in ETFs or in index funds, and not so much in impact investing because that's a lot more work. But I think, eventually it needs to change because if you take the clients of these pension fund, the pensioners, I mean, if they want to live in a world worth living, we do need to change the investments. So I also feel the awareness is increasing around that. So we do need more investments to move into impact.
That's super helpful. Yes, I think, yes, the client perspective will come on to that, definitely. That's really interesting. I love the idea that we learn from nature. You know, diversity is critical. And it's why should it be any different in any system? It makes great sense. Maybe we could just talk about actually a little bit more about the impact measurement. And this is something that I think, one of the B Corps, that is an investment firm called Web, has said all investing is impact investing because every investment has an impact. It's only whether investors know what that impact is that it's creating. And so I just wonder whether you felt that actually the system is inherently set up to create minimum outcomes for all. And if investors actually got greater clarity on the true impact of these decisions, would that actually help get us to a point where we had much more sustainable outcomes? And should they be really fighting for that, this knowledge that they don't have?
I think so, Katie. I think that's crucial. I think transparency is key here. And at the moment, we don't really measure the right things. And that goes for a company level, it also goes for a country level. So on a country level, GDP is not, let's say, measuring our well-being. So it's in my opinion, it's too limited of a measure. And the same goes for companies. Let's say the negative externalities or the positive impact the company is creating. It's not really measured in this simple figure of profit. So we do need to change that. I think true cost accounting is it's important for that. but also what we see in the financial sector, the measuring of impact is important. And yeah, we are all learning there. It's not easy, but it's important that we keep on improving. And yeah, there are a number of initiatives in the sector. The GIN is leading there with Iris Plus, but there's also the impact management project that was started by Bridges. So I think it's crucial that we both measure the positive impact, but also get more clarity on the negative impact. And I think there's also this project now, but Philippe can tell more about it. It's the framework, the European framework, the taxonomy for defining what is green investment. And Philippe has been on the technical expert, so I'm sure he can tell more about it.
Yes, Philippe, tell us.
If I may, I would like to build on this and to add something about impact measurement and impact investing. So for us, I think there are very three requirements that we need to have if we call something impact. And the first one, and maybe the most important one, is intentionality. I mean, you don't do impact if you don't want to do impact. So, of course, everything has an impact. But the important thing is, what is your intention? What do you want to do? And then the second requirement is additionality. If you do something, it has to be additional for on the top of what is already existing. And then the third one is of course the measurement. So if you have an intention and if you're additional and if you can measure it, then we can call it impact.
Sorry, I'm losing my mute. I live on a very busy road. Normally ambulances are flying past, so I'm trying to keep the sound off, and then I can't find the button fast enough. Yeah, that's super helpful. And actually, Philippe, just to pick up on this, I mean, I think you've got a real insight from the work you've been doing with the finance associations, both in France and at the European level, as to how the industry really thinks about its role and its need to reimagine it. Actually, may I just read you? I thought this was a really powerful quote from Transformation Capital, which is an initiative led by EIT Climate Kick. Now, it's coming at it from a climate angle, but I think you could see the relevance across all the issues we want to face in impact. So it says, climate change and other complex societal issues demand deep structural change to the way in which our economies and our societies behave. And this will create systemic volatility that traditional investors are really ill-equipped to handle, and they're disincentivized to facilitate, so they resist it. So unless the finance industry reimagines its role in society and redefines its objective function, it will fail not only to catalyze the profound transitions that the world needs, but also to preserve wealth and economic stability for the future generations. So it'd just be really interesting to know whether you feel that the finance industry, from your perspective, both at French level and European level, is ready for this. Is it, and what do we need to do to get it to be so?
So, I mean, it's improving, that's what we can say, but there is still a very strong resistance. If you look at the, for example, the European Association of Asset Managers and the way they are reacting to new regulation, we see a lot of resistance, and moreover, I think that it's easier today to change the periphery of the system than the system itself. That means that, for example, I mean, creating new products which could, products on good returns and doing good business is something that we can do. For example, the green bond market has evolved very strongly, has developed very strongly the last 10 years. The impact investing is going quite well. The impact investing market is going quite well as well. All we achieved to do during the high-level expert group, for example, was clearly pushing on this. I mean, clearly strengthening all these green markets and also help for more transparency, more disclosure, and so on. But when it comes to change the system itself, and especially short-termism, the weight of very complex products, derivative products, for example, high frequency trading. And when it comes to this, it's becoming very, very difficult to change. And so I think today the financial market is clearly not behaving as a sustainable market. And it was the objective of the high-level expert group, by the way. The agenda, the objective of the group, our mission was to make some proposal in order to make the European sustainable finance system more sustainable. So that's really a huge objective. But, today, what we can say, and I would like also to come back to what Marilou said about passive investment, because it's very, very important. The bulk of the pension market today is managed passively. That means that the managers are only doing copy-paste of the market indices. So there is no choice. There is no trust in a project or in a team or in people. It's only just copying the market and the world as it is. And then that is also probably a reason of the market failures we have. Because coming back to this idea of diversity in the market is clearly the fact that if you have a lot of people with different ideas, then you can maybe reach something which is the right price and the discovery of a right price in the market. But if everybody is doing the same thing, there is no way you can achieve to get the right price in the market. And this is something that we have today: much more volatility, bubbles. Exuberance, like Alan Greenspan said 20 years ago now. So this is a situation that what we have today, and to change this, probably we need more than only relying on the industry itself, and we need some political move.
That's very interesting. Yes, well, and we see the EU moving on this considerably, and I think the statement yesterday by the president was sort of very much along these lines and supported by the Green Deal program. But before we go to that, I was actually wanting to ask you a little bit about whether you felt environmental, social and governance funding, ESG, has got some of the opportunities for hope that you raise. It seems that the latest figures from the investment research company Morningstar is showing that sustainable funds just this year in 2020 have raised over 97 billion euros, whereas the outflows from non-sustainable funds are at 27 billion. So there seems to be something of a rush towards ESG, and it's potentially seen as an important bulwark for action against this passive investment that you see as a significant issue. So I just wondered what you felt was the role of ESG funds, and can we go beyond them, because they're clearly not. We need to stretch it.
A couple of thoughts. First, what does it mean, ESG? It's very difficult to define it. Basically, ESG is you integrate environmental, social, and governance criteria into your investment decisions. But what does it mean, integrating these ESG criteria? You can do it for different purposes. You can do it because you think there is a link between ESG and performance and return. So you think that some of the ESG criteria are material, financially material. So there is a link between materiality and ESG. So if you do it only for this, I don't think it will create a lot of impact. Or on the other way, you use ESG really to make an impact, because you think you want to manage the positive and negative externalities of your investments. So it's very different. Today, you have both existing. In the industry, not only in the industry, not only for what the asset managers are doing, but also in the rating agencies. If you look at our rating, extra financial rating agencies are providing their ESG data. Some of them are very close to the materiality vision of ESG. So that's the first point. So we need to clarify what we call ESG. Then the second point is that of course we see a very strong growth of the ESG fund, and especially the last year, and especially this year, I would say, because of the very, very good performance of this fund, especially this year during this crisis. Why? I mean, from the beginning of this year, all the ESG funds have outperformed massively market indices for different reasons. First one is that there is a sector allocation, and so most of these funds are away from the oil industry and all the industries, very carbon-intensive industries, which have suffered a lot during this crisis. That's a good point. Second reason is that they, on the opposite, they are invested in solutions for sustainable development, and the market has started to see that all the packages from the government, the recovery packages will be targeted on these industries, and so they are seeing a very good opportunity, that so they invest in it. So all the ESG funds have benefited from this. And I will add a third reason, which is, I think, very interesting, is the risk management. When you are a company and you manage long-term risk, sometimes it's very difficult. I mean, to tell to a company leaders that they should look at climate risk because it's very long-term. It's in 10 years or in 15 years, and so they don't like to look at it, or it's very difficult because it's there is a kind of opposition between this and the short-term result of the company. But what we can see is that the companies which manage very well the long-term risk are also the companies which can resist the best resist to the short-term crisis. If you look at, for example, one example, which is the supply chain management. If you in a company, if you manage very well your supply chain, especially because you don't want to have a human risk in your supply chain, then when this kind of crisis come, like the COVID crisis, you know your supply chain better, and so you can also react more rapidly to a rupture in your supply chain, like we saw during this crisis. So this relationship between long-term risk and the way you can react to short-term events is also very interesting.
That's super interesting. Yes, and I don't know, Marilou, if you have a thought about this kind of pushing towards mainstream. When something becomes mainstream, it sounds good. It sounds as though it's going to be adopted well, and it sounds as though it's going to be something that then is brought forward. But is there a risk that it will then fall foul of your earlier principle, that it becomes too homogenous? It doesn't have any opportunity to really to create the diversity we need. So there's a risk here, isn't there, with ESG becoming just popular but not really leading us anywhere?
Yeah, ultimately it's about the real change, and it's about the accountability. So, and I think this has also a lot to do with, I would say, the consciousness around money. So, let's say people really looking what's happening, what's changing. So. And I think it also, as Philippe was saying, there's a lot with the intentionality. So it means if you are, let's say, private investor and you're looking for an investment fund, I think you really have to also look at what are the intentions of the managers of these funds. What are they aiming to do? And I would say as pioneers, we've always had this sense of urgency, and there's with many of us from the early days a clear sense that it's crucial that we change in order to have a livable planet. And I think let's say therefore it's important for investors to really understand what is happening, what is the intention of the managers, and how they're going about it, and also in terms of the transparency, showing the real results.
Yeah, absolutely. No, that makes great sense. I was just thinking with the impact of COVID on our on reaching the Sustainable Development Goals has really taken a very big hit. The UN actually estimates that 71 million people are now expected to be pushed back into extreme poverty in 2020. And this is the first rise in global poverty since 1998. So again, I think it's a question there. If you mentioned the political opportunities or need to play a role here, what can the combination of political and financial initiatives do to address that? Because it just seems beyond tragic. We're going backwards in this crisis.
Political, financial, and also industrial and economical move, because what the COVID crisis shows clearly is that there is a direct link between common good, between the health of the people and of the society, and the conduct of a business. You cannot run a business in a context where everybody has to stay at home, and so this is something that sustainable finance is just saying, has been saying for years. A company is not an island; it's not something completely disconnected from the rest, from the community, from the country, from the people. And if you want to run your business efficiently, you need to think about this. So we are just 50 years after this Milton Friedman statement, with article where he said that the objective of a company should be only to make profit, and the social responsibility of a company was to make profit. So now we have this clear proof that it's completely wrong, and so I think that the governance, the role of companies, all this movement of course about B Corp and the law which has been passed in France last year about these société à mission and purpose-driven company is very, very important, because it's there is clear link. It's impossible to deal with issues like climate change, inequalities, loss of biodiversity, if we continue to have the same system. And same system, I was mentioning the financial system and the way it behaves today, with all this complexity and so on, but it's also the economical system, capitalism, and the way the capitalism works today. So we have to change this if you want to solve this issue. And then coming back to what you said about mainstreaming, I think we are in a very special situation at crossroads today, because people like Marilou and I and others, these last 10 or 15 years, we have tried to put this topic, sustainability in finance, on the agenda, and finally we have succeeded. It's there today. It's clearly everybody talking about this. ESG is everywhere, and so there is a success for this first step. But now we are entering into a new phase, and this second phase is mainstreaming, is putting it at scale. And the big question today is, are we going to see a movement which will put at scale what we have done during these last 10 years, which will be, of course, wonderful and very positive? Or are we going to see a mainstreaming with a kind of dilution of what we have done? And this is something I'm afraid we are probably going into. There is a risk that we go into that direction, meaning big organization only picking into sustainable finance what they want to pick, what is the less disruptive, and then put aside the real change of the system in itself.
And would you see there's some obvious roles that could prevent that? Sorry, Marilou, did you want to come in there? I didn't want to did you want to jump in on that?
No. I very much agree with Philip, and I actually see in that sense. I mean, not only a role for politicians, but specifically for. I would say also for people like you and me. I mean, it's very much, and I would not underestimate the power of ordinary people. I mean, let's say we can hold our pensions accountable. We can ask them to change their investment policies. And if, for example, I look at the private wealth banks at the moment, it's because of their clients, and I would say specifically the younger generation. They are simply demanding different type of products, which are more aligned with the I would say the vision they have for the future world, or with their values. So it's because of them that these private wealth banks are now changing into impact investing. So it's and I'm sure these clients will hold them accountable. So I think there's a lot to do for all of us. We are all investors in a certain way, either directly or through our pensions or through our savings. So, so we can play a role.
I fully agree, and there is some good news coming from the European Commission that's on the side with the evolution of the MiFID directive. Which will now ask all the financial advisors to enter into a discussion with the savers about the environmental and social preferences, which is very good because today, we need to give more power to the savers, to the citizens, and also, of course, pension fund beneficiaries. We don't know today what they want to do, if they want to, where they want to invest their money. When you put some money into your banking account or into your insurance contracts, it's very opaque today. And this regulation, the evolution of this regulation, which was one of the proposals that we made in the high-level expert group, I think it's very could be very powerful.
Yeah. And I think combined with changing the additional, with the obligations and the fiduciary duties, clarifying what those duties really are for investors, what they must ask, what they must look for, so that they're not just recipients of information, but they actually actively create the demand for the impact that they should be seeking. Feels very a really big step forward. But yeah, it'd be interesting to see whether we just have to pull lots of levers at the same time, whether it's policy, regulation, some systemic changes, really make impact investment much more readily available, encourage savers to ask, or whether we have a sequence. And I think we've tried all versions, and it feels as though we're now just all hands on deck to make this happen in the next decade. Is that your sense, that there isn't a systematic order to this? There's just a question of really moving through the different levers and making them all operate.
Yeah, I think so. And I think, let's say, what is very different, I would say, in this day and age is the realization that, let's say, for the change that we need, no one can achieve this on its own. So now more than ever, I think we need cooperation. And this is really the time to move, I would say, from competition to mutual aid. and really, let's say, have companies working together, but also citizens working together with companies, with movements. So I think, let's say, movements like the B Corp movement are crucial in achieving this and realizing, I would say, the interdependence of it all. So.
Exactly, absolutely. And yes, it's very powerful, the role that, I was going to ask you about the role of pioneers. You've been a pioneer, both of you are pioneering. This agenda is out there, the need is clear, the data shows how much we need to be investing for impact. So what do you think is the role of a pioneer now that you've laid your cards on the table, you've shown it can be done? What's your next steps? Who do you now, how do you now make this next step to get to from company or private office to system? Say that again, Philippe.
I think we still need to be very conscious about what's happening and to help the market to continue on the right way. But also, I think cooperation and when 3 years ago I took the initiative to create Finance for Tomorrow, which is
Yes.
the gathering of all the players in the sustainable finance industry in France. And so we had public and private stakeholders. I mean, banks, insurance companies, investors, NGOs, the government, and so I think this kind of organization is very useful because we need to add all the efforts. And also more cooperation in between the financial players in order to create new tools. From the beginning, all we have done at Mirova is open source. When we developed the carbon footprinting of our portfolio, it was fairly open source from the beginning. A couple of months ago, we took an initiative alongside with BNP Paribas, AXA, and Sycomore to create a database in order to measure the impact of companies on nature and biodiversity. Because today we have a lot of data on the carbon side and climate side, but very, very few and nothing on biodiversity. And so we want now to put this into the agenda as well. And so this was a common play. Again, for this as well, we have started to speak with another consortium, which is called OP2B, One Planet for Biodiversity, which is led by Danone and other big corporates. And so we are going to work collectively, corporates and financial players on this. So yeah, I think all these initiatives are welcome, I think.
Absolutely. No, that's fantastic. I wanted to just finish. We're going to have to finish in a few minutes, but I wanted to just ask you both a couple of things. One is about, I think there are over 500 people who are registered today, and I'm sure some of them are in early stages of their career. They may well be in finance, or they may be in a corporate who's receiving finance, or in a startup. And I'd be really interested, what could you sort of say to them to help them think about their role as individuals that they can play? You've touched on a few things. I know, Marilou, with your interest in getting women into finance, there may be a special angle there. But we're all part of this system. It's only man-made. So how can we make the one we want to create? Any thoughts for our audience?
Yeah, maybe very briefly. I think, let's say it's time that we look different at the way money plays a role in all of our lives. In general, there's very little consciousness around money. I think we've been sacrificing a lot for money, and I think now it's time to turn it around and let our money work for what we really value and what we really feel is important. So let's say in the way we buy our things, the way we invest, the way we give away money. So I think a lot has to do, and there's a role for all of us. We all have choices here. So I would say, no matter where you work, what you do, try to realize that you really have power through the way you use your money, and it's your money.
Yeah,
so you can
that's really powerful.
Life through that.
That's so important. Yes, Philippe, sorry.
No, I would say I've not a lot to say and especially to the young people who are listening today, but I would prefer to listen to them. I mean, and I think we should listen to them more. Because, I mean, there are a lot of very, very strong and interesting initiatives coming from the young people. There is one in France which is called Pour un réveil écologique, and it's just students from big universities and schools, who said we don't want to work anymore in companies which are investing in fossil fuels, which are not taking into account climate change and so on. So we really want to get a sense of what we do in our job, and this is not something that we learn in the school and the universities today. So we want also a change in the program, in the university's program.
Absolutely.
That's very, very important. So and we need to listen to this, and this is the Greta Thunberg generation, and and this is key.
Yeah, there's a real leapfrog there, isn't it, from a 16-year-old to really take this agenda on. She didn't wait for the 20-year-olds necessarily. She's leapfrogged into the world. Okay, are you up for a quick fire game? Just very quick, immediate responses to quick questions. Philippe, I'll start with you. E, S, or G? Which would you pick? Just not too much thought. Don't go too far into thinking. Just
I would take G, working for ENS.
Okay. G, working for ENS. Okay, perfect. Marilou, your top SDG. Could you give us the top SDG? Any one of the goals you're particularly focused on?
Well, yeah, I actually think it's SDG 17. So what I earlier said about cooperation, I mean, without we all have to cooperate to make these changes. And then the second one, women for me.
Number 5.
Yes. Number 5. Yeah. Okay, yeah. So 17 and 5. Okay, that sounds good. Okay, stories or data, if you have to choose. Stories or data? Stories or data? You can only have one. Stories? Stories, did you say? Marilou?
Yeah, I would say stories because, I mean, stories provide inspiration and hope. So that's what we need.
Okay. Last two. Network or movement? You can, no need if you don't have a preference, you don't have to answer if you feel there's okay.
Yeah, I would say
movement. Yeah. Yeah. Okay. And the last one, more financial. Dollars or renminbi?
Euro.
Euro. I nearly put that down, but I just thought that was probably too direct. Okay, wonderful. Well, that's been fantastic. I can't thank you enough for joining us and having this wonderful conversation with you. It's been really wonderful. And I think just to get a snapshot of your world, your thinking of what you're doing, how you're making change happen, and have been for so long. Really big thank you to you both. And I'm sure I can't see the audience, but I'm sure on their behalf I can thank you. I'd also just like to quickly thank Thomas, Carolina, and Kasia from NetGuru team for their generous support in allowing us to host this event. And of course, to my wonderful colleagues at BLab Europe, Yelis and Naila, who are behind the scenes at the moment. And I'd also love to thank our audience. We're really pleased you were with us here today. Please do continue the discussion. We're actually running this series of Interdependence Unpacked, so please look us up on YouTube and you can hear more. And if you're interested in knowing more about the B Corp movement, please just look up on bcorporation.eu. We're now going to have a short pause, and then I'm delighted to be handing over to my dear colleague Naila Benamara, and she's going to be speaking with an investor and an investee pair, both of the B Corps. We have Paul Chifflet from Dano Manifesto Ventures and Jean Moreau from Phoenix. And this will build on the conversation we've just had by providing a really powerful example of a relationship between the investor and a investee that's based on a concept of sustainability and impact focus. So at this point, I think we just give you a break to have a short cup of tea or whatever you're at. And then soon we will be, Nina will be joining you. So just once again, thank you so much, Marilou. Thank you so much, Philippe. Wonderful to have you both such advocates for the B Corp movement and for the change we really seek. Together, we'll get there. Thank you.
Thanks.
Thank you. Bye.
Bye.